Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's just dive right in and take a look, see what's going on today. If you want to follow me, it's at @find_finance. If you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities, sharing those opportunities with everybody in the community. I share more than just opportunities. I share my experiences, my strategies. I have what's called a three pillars approach, which is ratios, market cycles, and technical analysis. And you will learn how to use those pillars for investing. I also do a little bit and talk a little bit about my opinions around portfolio allocation and allocating to certain companies like speculative companies and cash flow companies and so forth. If that's something you're interested in, sign up, try it out, see if it's right for you. Special coupon code will save you 50% off the first month on a monthly membership and a larger discount on the yearly membership, and you can always swap from a monthly to a yearly. All right, so I've got some stuff I posted up here. Not a lot of stuff was really being talked about on Twitter in terms of financial stuff that I was interested in. So sometimes I go in and I start posting some things. This is currency exchange rates, commodities style. So a lot of the commodity currencies during a commodity bull market, what we see is a weaker dollar and stronger commodity currencies. Money then flows away from dollar denominated assets into the commodities and the currencies that are strengthening. So this is Canadian USD. And why is this important? What are we looking at? Why am I doing this? Well, what I'm looking for is I'm looking for information where a commodity bull market is coming. And I get in early. I look for bottoms, bottom of the bottom. How do you buy bottom of the bottoms? Well, one, you have to be first. And how do you be first? Well, you can't go off of pricing. You can't go off of news. You can't go off of other people's opinions or experts' opinions because they're all influenced by the greater herd acceptance out in the world. So in order to be first, in order to take an opposite bet of everyone else, you're going to have to go against everyone almost. And the only way that I have found that you can reliably do that is by looking at patterns. If you had purchased here in the bottom of 2000, 2001, 2002 in this corner here, that would have been an excellent entry point for a variety of commodity companies during the last commodity bull market. The actual ratio bottomed in 98, 99, and some companies were well positioned for that. That was the bottom of the bottom for some companies. Other companies, bottom of bottom was in here. So it is advantageous to understand that there could be 10, 11, 12, 13 different charts all saying the same thing, which is a confluence of information. I try buying in these corners, and then I ride it on up. Now, this is Canadian dollar versus the United States dollar. The last commodity bull market bottomed in here in the corner of this and worked its way up to 2008 peak and a 2011 peak. These are the two peaks right here in front of us. We went into another consolidation. These consolidations, generally the dollar does better, and we go into a technology boom. So tech stocks and S&P 500 and stuff does very well from these peaks. So 2008, 9, and 2011 were both very good entry points for technology companies in America. And then the American dollar, or USD, outperformed coming all the way back into this corner here. In my opinion, and in my estimation, the commodity bull market like 98, 99 here started in 2020. And then we look for things that rhyme. You know, they might not be the same, but they rhyme. They're very similar. So we had a 1, 2, 3, and then we have this big hump there, the humps over here. And now we're trying to break out. What you'll see generally in a weaker dollar is you'll see lowering of interest rates. Is Powell going to lower interest rates? Well, it seems likely. And more than likely, you're going to see the Canadian dollar outperform the United States dollar. This here is in the same sequence as this here back here. And the ratios all align, the valuations align, the bottoming patterns in commodity companies align. Everything's in alignment for this bull market and then this one that's coming. We also have other currencies that are breaking out or about to break out. The South African rand versus the dollar has been in just one big, gigantic, brutal bear market. I think that this will be one of the greatest opportunities here amongst a lot of these currencies, because even during last bull market, we were in decline. This was the last bull market back here, and we were declining in this currency. This looks like it's trying to break out. We've got BRL USD, which is the Brazilian real, in a squeeze into a double bottom. And we're on the right-hand side of the double bottom. This is still a very early entry point for some of these, not just currencies, but the equities that are behind these currencies. And then we've got the Australian dollar versus United States dollar. Last bull market, it bottomed in 2000, 2001, which was back here. We had a big breakout of that big long-term downtrend. We had another consolidation, 1, 2, 3, and now I think we are going to explode higher in AUD versus USD. What is this all pointing to? It's pointing to a weaker dollar. That's really what it is. And the reason I think we're going to explode is because we were in a downtrend. Generally, you get a sideways action, which the sideways action was from 2000 to 2025. And then I think we're going to get a move higher. Now we're going to be in an uptrend, not just a sideways move. This is going to be a big boy uptrend. All your base are belong to us. Breaking bases is what I call it. ETFs, URA, SLX, and GOX. And that's, I just chose 3. There are more than this. There's COPX. There's going to be other ones like lithium breaking out and rare earths, and there's all sorts of stuff breaking out. But that was an old movie. All your base are, or not movie, it was an old game. And in the game, it says all your base are belong to us. So we're talking about breaking bases. This is Global X Gold Explorers. I drew that a little bit crooked. It should be up here. But we're breaking out. That's looking good. We've got URA, which is also breaking out of this big long-term base. Double bottom. We chopped sideways, and we've broken out above all of that resistance. What does this mean? Why am I showing this? I'm showing that this here and the ratio that corresponds with it, it's all corresponding to a bottom, a big, fat 20, 30, 40-year bottom in pricing of equities in the commodity spaces. All of this is adding up to say something. All of it. And here's steel. And not a lot of people talk about steel. But remember the double bottom here? So the double bottom's down here, and then we break out, and then that's breaking out. Well, that's just before the breakout here. We're just at resistance, ready to break. These are going to be big moves. And usually what happens is you get a base, you get a decline, a squeeze, a base, and then you break out, and sometimes you get a consolidation on top, which we did. This is going to be wave 1, this is going to be wave 2 up here, and then we're going to go into wave 3. In stage analysis, it's stage 1 and stage 2 is here. Now, these are big long-term, big picture views. These are years on the bottom here. So this is going to go up for years, not months, not weeks. And I'm not stating that this is short-term trading crap, guys. I'm not a short-term trader. I'm going to ride this thing, and I've been riding some of these from here, from here, from here. I've been buying all over the place, riding this big bull market. It's like buying stocks in 1980s, the early 80s. and then riding the bull market through the 80s, 90s, and even into the 2000s, up thousands and thousands and thousands of percents in some of these companies. It's going to be the same thing, I think, for a lot of the commodity sector. Gold looking solid. So I noticed I was looking at the gold chart. We're breaking out here or very soon. That looks very, very good. We've got URA breaking higher, and this is on the shorter term. That is a flag pattern breaking to the upside here. And we're going to get a breakout and a big move, most likely, over time. Do not get impatient with this stuff. These are big, long-term charts. And a lot of people, even this little pullback, throws people. It's like, guys, I'm trying to take a big picture view here, show you the big picture and how this can just keep going and going. We've got these gigantic setups and everything that I can look at in the commodity space. For the most part, almost everything looks pretty prime. It looks pretty good. Now here's XOP. I know we're getting a lot of bears in the energy space. And being bearish is just a function of the overall sentiment that we've got going on today. Am I bearish on energy? No, I take the opposite bet. I'm bullish on energy. Now, could I be wrong for the next 2 quarters, 3 quarters? Yeah, I could. But here's the thing, guys. I'm not buying bearish or bullish news. I am buying when smart money is buying. So I'm not trying to predict when the news will change. I can give 2 craps about the news changing. What I care about is when are the stocks going to go up? Maybe I should already be positioned in this, and the negative sentiment is bottoming now. And the smart money is already accumulating. So in XOP, we probably bottomed in April, and we've got downward facing patterns, and we've been breaking higher in XOP, the ETF. We also have XOP breaking out against crude oil itself. Now, when does XOP outperform crude oil? In a bull market. So if this is breaking out, what does that tell us? That we are in a bull market. We are in a bull market. And you're going to hear me say this. Well, we're in a bull market. I'm just going to hold on. So keep that in mind. We are in a bull market. We're starting to break, even though things look dire or they look negative at this time. Not me. You look at the charts, you get the entries from how people are positioning. You're not getting entries off news. You can't go find and search news. You can't find people to agree with you. That's what bottoms feel like. And a lot of people, I see this just a lot in general. I will make a comment or an opinion and it won't match anyone else's. And then they go and they look, they search. They try to use AI, but AI just searches other people's opinions about the sector. You can't go that way. You have to use patterns to get you early entry points. You cannot use news. You cannot get a second opinion even, because the opinion that you might be getting might not be good. So you're going to have to start to think for yourself. You're going to have to start to use these patterns, get comfortable with the patterns, and get entry points that are low, and get used to buying when everybody's telling you that what the heck are you doing buying stock in that sector? That is negative right now. And that's exactly how you get bottoms. Industrial metals, steel, and miners aren't just moving, they're breaking out. XME just cleared major resistance. The question isn't if this matters. It's, are you paying attention? Metals and miners sector, XME ETF breaking out now. See the double bottom? There's your double bottom. You draw a line across. Boom. We've broken out of the base and we're starting to head higher here. And we're starting to break all of the last resistance from previous bull markets. Now, this is kind of an amalgamation of a whole bunch of different sectors in this because it's the metals and mining sector. Now, when you start to dive into individual companies and you start to look at those companies, there are companies that are here at this double bottom down here. There are some that are down there, and you may have to go into more speculative areas because usually the big boys go first, the mid caps and mid caps go second, and then the developers, and then the explorers. And I very well am going to play every single one of these. Now, I'm not so much in the big boys. The big boys don't move enough for me, but I am going to play a lot of the mid cap, small cap developers, and maybe a little bit in the explorers. And it deals with risk reward and asymmetry. Some of those mid cap, small cap companies can get you 20 to 100x last bull market. So if I can get a 20 to 100x in companies that are newly producing or are producers that are just out of favor, I'll go with those. I don't need to take the extra risk necessarily in some speculative company that's just basically a piece of land that barely beats that. So you gotta really dial in your risk reward. You got to dial in those portfolio allocations, and you got to dial it all in for what's coming and where the puck is going. So this is the metals and mining sector ETF here. It's starting to break out. We've got smaller cap companies and some other companies that might have a little bit different setup. I don't want to get too detailed, but a little bit different setup where they're down very, very low right now. And sometimes you get a double bottom and you get like a third move lower back here. I'm getting a whole bunch of these. There's another reason why the Fed may potentially cut rates. So this is insane. The BLS is set to revise down U.S. job numbers by 550,000 to 950,000 for 12 months ending March 2025 on September 9th, according to Goldman Sachs estimates. You know why they're doing this? They want to lower interest rates. Well, just manufacture a recession, manufacture a slowdown. Now, what you have to kind of think about is how is that going to impact the stocks? And is the market going to believe the numbers? I don't know. Tough to say. So is this going to change my strategy? No, it doesn't. I'm not worried about the short-term little market movements, guys. What's coming is big. We've got all the chart patterns above. And all of this information is getting baked into these patterns. Insiders know what's going on, and maybe they don't even believe this. So how do you believe the data that's being released? You don't. You go with the charts. You go with the ratios of what's cheap. You just stick with it. Coming up, Doric. In July, Brazil exported 41.1 million tons of iron ore, a 13.54% increase from the previous month and the highest monthly volume in the past 5 years. So that's Brazil iron ore exports at the highest it's been in the past 5 years. Looking good. I like iron ore. I do. Joseph Brown says, I've always said, if you want to make more money, get married and have kids. You'll have more responsibility, more drive, someone helping you go through the rest of life. And these all help you become what's necessary to make more money. So what we have here is the wage and salary income, employed men and women by marital status, 2016. So married men are making more money, adjusted for 2016 dollars, than married women, single men, and single women. Now, I think there's a little bit of, I don't know if it's biased, but I think there's some reasoning behind why maybe married men might make more than single men. And I don't think it's just because responsibility. I think there's a component that responsibility is in there and that they make more money. I do agree with that. But I also think that that, let's just say, more capable men are married than single at a lot of age ranges. So, if you're in your 30s and your 40s and you're a very capable person and you're a male, more than likely you're going to get married because women go after resources to some extent and security. So I would say a lot more men that have or that make more money are probably more sought after for females and are more likely to get married. So when I look at this data, it's like, yeah, so smarter, better off men are going to get grabbed by females and probably married than just the impact of being married and trying to make more money. So if you have a lot of money before you get married, let's say you're in your 20s and you're killing it, and you're pretty attractive, let's say, like you're decently attractive, but you're making good money, you're decently attractive, you're smart because smarter people in general make more money, you're going to be a better candidate to get married. Therefore, smarter, better looking people who make more money are more likely to get married, which then would impact married men and their income. So I don't know which one comes first. I don't know if richer men are more likely to get married or if because they're married, they make more money, if that makes sense. Tough decision. If the Saudis are really in control, we will find out what they really want or what they want really soon. And you can see Saudi crude exports. It's not. I thought we were going to get all this, an oil glut, and we were going to have all this oil in the market. Where is it? Where is it? 2023, 2024. 2024 is down here. 2023 is here. And we're not like killing the exports here. It's still pretty low, and it's comparable to March, April, and May. I thought we were going to have this huge quota increase and we were going to start exporting oil all over the place. Well, where is it? Where is it? Chart of the day. Wholesale beef prices are extending their spectacular rally, heralding another food inflation headache. The latest supply glitch, a parasite in Mexican livestock, and Trump's tariffs hitting key supplier Brazil. Cattle prices are up 30% since August of 2024. Yeah, that's ripping there. That's good old live cattle. New Star, gold is about to wipe the floor with the stock markets in the next 5+ years. See the attached post below, which told you this was coming over 2 years ago when gold was around $1,800 an ounce. Big gold bull market. There's the bull ripping higher, another bull ripping higher, and then we are in another couple of bulls here, and we have broken out on the right-hand side. This is go time, baby. This is go time. You know what goes up with gold? Commodities. You know what all those bottoming patterns and the bases that we're all breaking up above? Yep, it's all interconnected with this one. It's all saying the same thing. Big bull market is in progress. Super cycle, baby. Super cycle here, super cycle here. And then in 2020, which was one of the ultimate bottoms here, right where my finger is down there, breakout, hit resistance, and did a cup pattern. And everyone was telling me, where's your super cycle? No, it's coming, guys. We are now in it. It's all breaking. Freight Futures AM update. Dry bulk, Capesize, and Panamax are flat. Tankers, VLCC is up 2%, Suezmax is up 1%. We've got emerging markets are emerging, and that one we did last time. So that's where I'm going to stop it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials the coupon code over there. And that's all I've got for today. So we'll catch you next time, guys. See ya.